What is going on, Ada Nation? Welcome to Dapp Central. I'm your host here, Fareed, and as a part of today's video, just like in every other video, we're going to be touching on all of the latest updates and news going on in the ecosystem. First things first, I want to do a brief review of the Cardano TVL, quickly highlighting some of the biggest gainers over the course of the last month. Following that, I've got a pretty cool piece of news that was just released at midnight on the very 1st of January for 2024, which was the midnight proof of concept coming in from the Iagon team. Now, after that, I want to quickly touch on OptionFlow, the very first options protocol building on Cardano, or to have launched on Cardano on, I believe it was the 22nd actually of December. So they've been up on the mainnet for a little bit over a week, and I just want to quickly give them the due credit that they deserve. Last but not least, we are going to be taking a look at some of the stats coming in from the Minswap protocol, as well as a recent proposal, which has yet to make it on chain just yet. But that's going to be focusing on potentially burning, right, some of the Minswap tokens or the Min token, the governance token for that platform. Without any further ado, and as always, if it's your first time stopping by the channel, my goal is to provide you in the Cardano and crypto community with all of the latest news going on in this growing ecosystem. If you guys would like to support me on my mission to go ahead and educate the broader space, then consider delegating with the Dapp Central Stake Pool, which is stake pool ticker DAPP. Between epoch number 451, all the way to 493, you will be eligible to earn the Matera governance token if you decide to delegate to the stake pool. And keep in mind that this is on top of your traditional ADA reward. So you'll be able to earn ADA as well as the Matera governance token. Without any further ado, let's go ahead and jump in to the very first topic for today's video, which is a brief review of the Cardano TVL. As it stands right now, we have over $415 million locked on the network, which is a brand new all-time high. If we take a look at that valuation in ADA, we do still have another all-time high at around, let's see here, 700 million ADA locked on the network. As always, keep in mind that this does not include liquid staking, which is one of the biggest assets that we have here on Cardano, which would actually take us into the billions if that were to be counted as such. Scrolling down, we've got Indigo coming in at number 1, which is the only protocol right now with over $100 million locked in terms of TVL, boasting a 1 month change of over 52%. Coming in at number 2, we've got Minswap with also a 52% gain in the last month, followed by LQ or Liquid with an additional 52% gain in the last month. We've got Jed with 25 million locked, A Starter with 24 million locked, followed by MusliSwap, LenFi, ViFi, Optum Finance, and Wing Riders. As you guys will note, there are tons of different dexes being included in terms of the TVL, and I think we still have the expectation to receive AXO. And then we just most recently saw the Genius Yield protocol also launching on the mainnet. So Genius Yield is at the very bottom here with, let's see there, 57,000 in terms of TVL. That will take us to the very first update. Want to keep that relatively short and sweet. Let's talk a little bit more about Iagon now. So Iagon is a decentralized storage protocol, which is officially live now on the mainnet. They went live about a week ago, and I covered that here on my previous Cardano Scoop episode. Now, right now, they do offer different types of rates or different types of storage plans, depending, number 1, on how you want to pay, whether that's monthly or yearly, and then secondarily, depending on whether or not you hold the Iagon token. So they're going to provide more data and basically a cheaper rate if you hold the Iagon token versus members who are looking to purchase storage without necessarily holding the Iagon token. Keep in mind, you can pay with ADA, or you can also pay with US dollars, or fiat, I should say. Now, that's besides the point here for today's update. I want to quickly highlight that on December 31st, breaking into midnight of the new year, the team released an interesting proof of concept for the Midnight network. Now, Midnight is going to be a data privacy blockchain, which I've covered here on the channel with Charles Hoskinson and Aaron Barak, the CEO of Midnight, highlighting exactly what they're aiming to do. Now, we've seen their Pioneer program kick off with the introduction of over, I believe it's 1,000 different contributors who are looking to contribute to the Midnight network. Now, one of them was selected as Iagon. So now that Iagon has had the time to actually be onboarded into that first cohort of developers for Midnight, they've released a proof of concept. So this is their health, data privacy, and advancing research POC, or proof of concept. Now this is going to involve Iagon's zero knowledge proof of concept blockchain, which is aiming to revolutionize the healthcare industry. So think, for example, of a company who maybe wants to have data on different types of diseases, different types of issues or natural causes, and they don't necessarily need the actual people's information who provide the data. Very similarly, if you're providing data to a company, right, you may want to help out their cause without necessarily having your identity being tied to that, given the fact that that is somewhat sensitive information. So through the utilization of zero knowledge rollups, the Iagon team is able to provide data to consumers or companies who want to consume that data without necessarily having to provide the identities of the people that actually provided the data. So on both ends, both parties are satisfied. Obviously, whoever is providing their data is able to do that in a secure way. And then whoever is consuming that is able to share that with the general public without having to run the risk of identifying or giving out potentially identifiable information for whoever is actually making up that data set. So now that we better understand exactly how this kind of technology can be used, if I jump over to the actual application, which is available at midnight.iagon.com, we've got two separate drop downs here. The first is labeled as diseases, which I believe allows for me to select different diseases. And then the second drop down allows me to select the year in which that particular disease was reported. And then I'm going to be represented or shown a globe, right, where I can then identify per country how many people were affected by said disease. So if I go ahead and let's go ahead and just maybe start off with digestive diseases here. And if I go ahead and jump into 2018, and if I hit search, and I jump over to the United States here, as you guys can see, we have, let's see, I think that is 3 million people being impacted by digestive diseases in the year of 2018. Let me just go ahead and just double check those numbers there. So yeah, that looks like 3.6 million people in the United States. Let's go and jump into potentially another one here. For example, something like conflict and terrorism. And this time I'm going to go ahead and select, let's say, 1990. There we go. And if I jump back over to the US, it looks like we have 1,388 people being impacted by conflict and terrorism back in that particular year. As you'll notice, as I hover over different countries and continents, I'm presented with the representation or the numbers for those particular areas. Now, I'm wondering where exactly the Iagon team has actually gotten this initial set of information, given the fact that it goes all the way back to 1990. I don't think this was collected as of late. They might actually be getting this from some sort of other historical database. But as a proof of concept, this is really interesting to see. Again, we're not able to dive deep into actually figure out who reported this information, but we're able to verify that it should be accurate utilizing ZK proof or ZK technology in order to confirm the underlying data. So I want to quickly touch on that there, again, coming in from the Iagon team. And I would hope to see more proof of concepts coming from other pioneers that are now joined or that have recently joined the Midnight Network. Moving into the next update here for today's Cardano Scoop, I want to briefly talk to you guys about the OptionFlow platform, which has now gone live on the mainnet. So this actually took place on, I believe it was December 21st, so a couple of days before Christmas. And this is going to be a brand new way to trade for more advanced or more seasoned traders. So if you buy an options contract, that's going to grant you the right, but not the obligation to buy or sell an underlying asset at a set price on or before a certain date. So if you want to bet that a Cardano native token's price will be higher than it is today, you can take out an options contract. And if you are correct that the value of that particular Cardano native token is higher than whatever the strike price is, when that date comes, you can actually then be in the money, or you can actually earn additional money. Similarly, you can bet against the price of a Cardano particular token, or bet that the price of a Cardano token will be going down, and that will be called a put option. So we can now take call options as well as put options right now on the Cardano mainnet through the utilization of OptionFlow. Now, they're conducting extensive testing on their testnet, which is still in beta, in order to add additional features in the near future. But right now, you can begin starting to trade utilizing the official app, which is available at app.optionflow.finance. If I jump over to the official platform, as you guys can see here, this is where you can actually mint your options. So as I mentioned earlier, you can either mint a call option, which is a long, and then you can mint a put option, which is a short. You can then select whatever asset that you want to go ahead and take the options contract on, which include all these assets that are listed here, which they've got quite the list. So basically every Cardano native token that you can think of is listed here that you can go ahead and take out some sort of options contract against it. If I jump back over, we've got the expiry date, which is basically the date in which the options expire. And then we've got the strike price, which is the price that you believe that the asset will be at on or before the strike or expiry date. We've got the amount of options that you want to go ahead and mint, and then you can actually go ahead and mint utilizing the create options button once you're ready. We've got the markets page here where we can view all of the current assets and their recent price action within the last 24 hours, last 7 days, and then we've got their volume and market cap data. If you have any ongoing trades, they'll be listed here on the My Trades. And then if you got any ongoing options, you can also see them listed here in the ongoing options page. So a pretty brief update that I want to go ahead and just quickly share with you guys there as well. When it comes to OptionFlow, there was a lot of anticipation surrounding the OPT token launching, and now their platform is now live in addition to the actual token being out in the open. We are expecting for additional platforms, for example, like the Genie Seal team, to also bring forth what they call options as well. And that should be interesting given the fact that that will be very similar to what we've already seen with OptionFlow, in that you'll be able to basically take options contracts for any Cardano native token built on the network. Okay, let's move into the last story for today's Cardano Scoop, which is going to be surrounding the Minswap protocol. So first things first, I want to quickly take a look at the stats for the last month, which was December. And then I want to talk about a recent proposal, which is still off chain, just surrounding the want or the need to burn the Minswap token. So as it stands right now, Minswap is the second largest protocol on Cardano with over 148 million ADA locked, which is equivalent to about $89 million, down a little bit over 3%, not too much in the last month. In terms of trading volume, that is up $301 million US, which is up 166%. In terms of unique active wallets, currently sits at about 36,000 users, which is up over 100% in the last month of December. The top traded tokens on the platform include SNEC, the up and coming meme coin on Cardano. We've got Friend, a new meme coin which is recently launched. We've got Hunt, the native token for the Dex Hunter protocol. And then last but not least, we've got Iagon, the native governance token for the Iagon decentralized storage protocol. Some of the highest APR farms include the ADA/Hunt pair, ADA/SNEC, ADA/JED, and ADA/RJV, or the Rejuve token, coming in from the NewNet or the Singularity Net ecosystem. Okay, scrolling down, we see here daily ADA rewards are down to about 32,000 ADA. Total active staked min is currently up over 18% with over 332 million min staked. The total number of unique stakers has gone down just a little bit, 12% to be specific, with over 3,700 stakers currently right now staking their min. Jumping into the very last topic here for today's Cardano Scoop, I want to talk about the recent proposal, which is still off chain, to burn the Minswap tokens in order to reduce the time that it takes to get all the tokens out as a part of their circulating supply. So in the background section, it states here, there's been a lot of discussions recently within the Minswap community regarding their Minomics. Minomics V2 was introduced to revamp their original tokenomics, and this was done in order to listen to the community feedback in an attempt to make the platform better. Now, the following improvements were made as a part of the Minomics V2. Number one, the redirect for the fee switch towards their Min stakers. So the fee switch, I believe, was originally going towards the protocol-owned DAO treasury, and that is now going to be redirected to Minswap token stakers, so they can now stake their Min tokens and earn ADA. Secondarily, they redirected, 50% of the Batcher fees towards the DAO treasury, which has accumulated to date over 335,000 ADA. Last but not least, they've cut down the emissions significantly from 670,000 min being emitted per day all the way down to 358,000 min being emitted per day. So a reduction of over 46% since the launch of Minomics V2. Now, the long-term aim for the DEX has always been to not entirely rely on the emissions, but to have trading fees progressively become a bigger part of the yield earned by liquidity providers. That makes sense. Again, as more people actually trade on the platform, they're going to be generating more fees, which then basically reduces the need for them to rely solely on emissions or the inflation of the tokens to provide value over to liquidity providers. Now, Minswap has been greatly adopted, which I think has been probably the reason why there's now this conversation ongoing. But I think that if they were not getting the kind of adoption that they were getting right now to be able to generate those trading fees, that they may not necessarily be proposing something like this in order to speed up the process in which it takes to get all their tokens out in terms of the circulating supply. Now, they talk about two specific reasons why they want to actually burn the Min token. Number one is a low float, and to clarify the maturity indicators for the protocol. Right now, at the rate that they're going in terms of emissions, I believe that it would take them over, let's see here, 23 years, right, to actually get all of their token supply out into the community. Now, as you guys can see there, that is a lot more than some of their competitors. The majority of the protocols aim to get their tokens out anywhere between 2 years and about 7 years. But then we've got outliers like Minswap, PancakeSwap, and Finance with a 58-year release schedule for all of their tokens. So extremely slow there from ViFi, but something like Minswap is kind of in the middle, right, with 23 years until all their tokens would theoretically come out into the entire market. Now, when it comes to the actual token burn, the tokens will be burnt from the Minswap team's allocation, but they're also going to be burning tokens from the yield farming allocation and the development fund. There's going to be 4 different options. The first option is to not burn anything and to basically follow the traditional schedule, which is again to release the tokens over the remaining 22 or 23 years. Scrolling down, we've got option number 2, which is to burn 20% of the tokens, 18% of that 20% coming from yield farming, and then 2% coming from their dev fund. Doing this will reduce, their total circulating supply release to a total of about 16 years. And then moving down, we've got a third option to burn 30% of their token supply, 27% of that coming from yield farming and 3% from the development fund, which will reduce the total amount of time that takes to reduce or to put out their circulating supply to 12.3 years. The last option and the most aggressive option is to burn 40% of the total supply of tokens right now, 36% of that coming from yield farming, and then 4% coming from the development fund, which will basically reduce their time to get all the tokens out into circulation to 9 years. Now, that particular option does seem to kind of line up with the industry standard right now, but keep in mind that that would be them burning over 40% of the tokens right now for the Minswap protocol. And again, keep in mind that they're not just burning the yield farming tokens, but that they're also going to be burning some of the funds for development. That will do it here for today's video, breaking down all the latest news going on in Cardano. That very last one is a little bit of a lengthier update. Again, I don't have enough time to break all the nuance down there when it comes to Minswap. But in a nutshell, they do provide everything in that particular article. So I'll go ahead and leave it down in the description as a part of today's video if you are a main token holder, to make sure that if this does make it on chain, that you do have the ability to go ahead and actually vote for it. That said, as a part of today's video, we talked about the Cardano TVL. We talked about Iagon and their healthcare MVP for Midnight. We talked about OptionFlow launching on the mainnet. And then last but not least, we just broke down some news surrounding Minswap. As always, if you found this particular video to be helpful, I would really appreciate you if you you could smash that thumbs up, it really does make a difference here on the channel. If it's your first time stopping by Dapp Central and you want more content like this, consider subscribing. And last but not least, if you have any questions surrounding anything that we've touched on as a part of today's video, then make sure to go ahead and leave a comment down below. That said, and as always, I will see you guys in the next video.